You're born a denier. It's tulip bulbs. It's a scam. This is the Peter Schiff. You're born a Peter Schiff. Maybe you stay a Peter Schiff. In about 20 years, people will look back and say, where were you during the digital gold rush? And if you recognized it and you did something about it, you'll be rich. And if you recognized it and talked about it, you'll have good stories. And there'll be a lot of people that didn't recognize it, and they'll be wherever they are. And I'm going to spend my time this morning describing it to you, and hopefully you'll be one of the ones that get rich. So let's start. My clicker, okay. The investor's dilemma. Investors have a simple dilemma. How do you make money? And what does it mean to make money? Well, how do I outperform the cost of capital? If we look at the performance of a bunch of assets, and this is most assets over the last 14 years, what you can see is that, investing in a bunch of things don't even beat the CPI, but there are a number of things that will beat the CPI. I mean, your typical diversified portfolio, your stocks, your real estate, et cetera. But the question is, what's the real benchmark for an investor? And I don't think it's the CPI. The CPI is a very synthetic metric, which is cherry-picked by a bunch of government-paid economists in order to be the lowest possible measure of inflation. If things get too expensive, they throw it out of the CPI. A much better measure would be the monetary inflation rate, or the expansion of the M2 money supply. And it turns out that the expansion of the money supply very, very closely tracks the performance of the S&P index over 100 years for Bitcoin, including me. And my journey from skeptic to believer. This is my public utterance on December 18th, 2013. Bitcoin's days are numbered. It's just a matter of time before it suffers the same fate as online gambling. Government's going to ban it. This is by the way, that's what I thought when Bitcoin was about $100 a share, or $100 a Bitcoin. When Bitcoin was $10,000 a Bitcoin, 100x later, this is what I thought. Oh my God, I have seen the light. Bitcoin is going to change the world. It's unstoppable. It's growing exponentially smarter, faster, and stronger. Now, this is the Bitcoin journey. And everybody goes through this journey. You're born a denier. It's tulip bulbs. It's a scam. This is the Peter Schiff. You're born a Peter Schiff. Maybe you stay a Peter Schiff. 1 hour is enough to be a skeptic. After 1 hour, you've learned just enough to hurt yourself. In 10 hours, you think, well, maybe it's an asset. I think I'll trade it. I'm going to buy it cheap and sell it when it's expensive. And then I'm going to buy it back cheap, and I'm just going to arbitrage something this way and that way. After 100 hours of study, of thinking about it, you become an investor. This is a digital monetary network. This is like Google for money. This is Facebook for money. Facebook for rich people. Rupert Murdoch never brought 100 million friends to Facebook. When Rupert Murdoch buys into Bitcoin, the billionaire brings billions with them, right? The trading idea is not that complicated, and the investor idea is it's the next big tech network. It's a digital monopoly for money. After about 1,000 hours, you become a maximalist, and a maximalist this is an ethical imperative. The world's a better place with this, right? The money's broken. The world is broken. Billions of people are suffering. Fix the money, fix the world. That is the Bitcoin journey. Now, depression. It's 100 hours to an investor. I only have 41 minutes left.
And there's a lot of FUD flying around. But if you take a look at the odds, bull markets for Bitcoin tend to end in macro inflection points. If we're looking at the odds, they're in our favor to stay bullish, even though it feels like we're in no man's land. It feels like we could definitely see a drop, maybe $10,000, bringing the price of Bitcoin down to $46,000. That could happen. But the odds are still in our favor. So let's look at that and how we can actually play this. We know the Fed is going to cut interest rates, which is typically bullish for risk assets. And we also know that in bull markets, this type of drawdown for Bitcoin is usually an opportunity to take some short-term positions. But certainly if you're an investor, these are areas where you have to be active. Even though it feels like we could go lower, it feels like there's a lot of uncertainty. In this video, we'll talk about how Bitcoin is still distributing from the all-time high. There was a huge ETF speculative run, and some of that has unwound it just as what it is. We're still in this downtrend, we're still in this distribution, and I don't see much changing until we maybe get past some of the election debates and the results become a little clearer. Right now, we know one candidate is very pro-Bitcoin and crypto. We're coming into the 50-period moving average, and the bulls are trying to defend it a little bit. But look, this isn't really bullish price action. It's not there yet. However, these are the times and periods when, over the years, you'll look back and think, yeah, that was a decent buying opportunity, or I'm glad I accumulated some then. That's the plan, get as much tech as possible. We'll talk about that in this video. There's a massive amount of uncertainty in the macro right now because people don't really know what's going to happen. That's the issue. We can't trade that. Individual investors should not trade macro uncertainty like this. It's just going to tie you up in knots and wreck you. So we need to take a longer term horizon and just play the odds and play the cards as they are dealt. The Fed's going to start cutting rates. The red line here is the Fed funds rate, and the blue line is the market rate. We're clearly pricing this in right now, and it's probably going to come down to 2%, 2.5%, maybe even 1.5%. So that's going to happen. Everyone knows it. That's not the uncertainty. The uncertainty is the election and potential personnel changes at the Treasury or Fed, which could change the plan. Because the market doesn't know this for sure, it can't price it in yet. I've seen many times when macro uncertainty creates price drops and weak price action. But then, once the certainty arrives, be it the election or something else, the market reacts positively, even if it's bad news, simply because the uncertainty is gone. We just have to play the odds in these scenarios. When you see weakness, you have to go in. I understand the last two recessions minus 2000 and 2008 were catastrophic, and after the Fed started cutting rates, you were down 12 months later. But in other recessions, when the Fed cut rates, we saw very positive price action. So the odds are in our favor here. You can't invest for these specific events, and you can't have all your money in cash waiting for a crash. That's not how an individual can invest. It's not playing the odds. The odds are in our favor to invest through uncertain times. You can see the current cycle playing out similarly to past ones. The macro is, of course, important for BTC's price in dollars, but Bitcoin itself, as a network, remains one of the strongest, with one of the highest growth rates of any large network. Check out the link below. $30,000 deposit bonus in Bybit. And if you buy and spend coins, check Nexo Exchange, and I'll see you in the next one.